Sorry. Hey, everybody. It's Shantae Parker and Craig Cam. We're doing our first live interview for 2022. I'm super excited. My most favorite person in the world is on here with me. I'm so excited. He's my partner in real estate, my partner in, should I say crime? No, just my partner in real estate, partner in mortgage. And we're here today because it's Martin Luther King's we're honoring Martin Luther King today, and Martin Luther King had a dream. And what we always talk about is helping people realize their dream through real estate. And so, for the last, I don't know, 5 years, I've been doing this on the third Monday of January because it's sort of a kickoff to the beginning of the year. And it's really to help anyone who was on the fence last year or any years prior who may be thinking about investing in real estate. And so today what we want to do is give you all the nuts and bolts, tips, tricks that we can muster in a 90 minutes to help you figure out how to get your real estate planning going for 2022. So first, a little bit about me, and then we're going to be speed talking because we want to make sure that we get to say everything we want to say. I'm also live on Instagram over here, so we have people over here. So I'm going to be looking back and forth. So sorry, Instagram is not the best because Instagram and streaming services are not compatible. So we have to do it this way. So here we are. So a little bit about me. I'm Shantae Parker. This is my 18th year in real estate. Prior to real estate, I was a public school teacher where I served for 22 years in the lower grades, kindergarten and pre-K. I also taught in the college, community college field for about 5 years. I came to real estate in 2004. And so this is my 18th year in real estate. I've been full-time real estate since 2009. I absolutely love what I do. And what I have come to understand in this business is that your partnerships, your team matters, especially in this hyper competitive market. And so I have partnered with Craig Cam and NF Lending for several years. And that partnership has grown. We've served lots of families over the years. Last year and the year before, in this COVID market in particular, because it's been extremely crazy with so many people stuck at home, really looking at their space and saying, hey, I need more space. Or sellers realizing I need more space. So they want to sell and buy at the same time. So we've worked really, really hard over the last 3 years in this COVID pandemic environment. And we've learned a lot in this market. And so I would say that we're definitely experts on how to get you into a house. He's an expert on how to get you a mortgage. I'm an expert on how to write a winning contract. And together, because we both are industry experts and we both have a reputation in the industry, people tend to take our contracts. And so we are excited to share with you today. So that's a little bit about me. Craig, why don't you share a little bit about yourself?
Okay, so my name is Craig. I started in the mortgage business in 1993. So I've been doing this a while. I'm in my early 50s right now, and I've pretty much done it my whole adult life as a job and as a career. I started in the mortgage industry. My kind of drive was to help people get into houses, and through that, I kind of realized that helping people get into houses kind of falls into a subcategory of helping first-time home buyers. So in the beginning, I was really, really driven just by the idea that I could take somebody who maybe never thought they could own a house or maybe really didn't understand the process, take them to that entire process and help somebody who never owned a house become a first-time home buyer. Then then over the years, obviously the mortgage business has changed dramatically. But what I really came to learn is that getting somebody into a house is not just a lender's responsibility. It's a lender, it's a realtor, it's a home inspector, it's a title person. You really have to build a team around the buyer, and they're kind of the coach, but you're like the assistant coaches in every area. And so when you put a good team together, what you end up getting is you end up getting good results because everybody in the transaction, from the buyer, the agent, the loan officer, the title company, everybody's goals are aligned. And what I mean by that is everybody's trying to get you to settlement, but you have to have really, really good quality people in that team in order to have a successful outcome. And when Shantae talks about being in the business for 18 years, when I work with her in a transaction, it shows. It shows how she communicates with the buyer. It shows how she communicates with the listing agent. It shows how she communicates with the different other entities in the transaction when they're either doing a great job or not performing. She can draw on years of experience, and so can I. So we can actually recognize when somebody is doing something good and when somebody's not really measuring up. And the combination of that team has really worked in a favorable way for us. And like she said, in an extremely tough market, and where it's super competitive and there's tons of people looking for houses and not a lot of inventory, we've had a lot of success. We don't get all our contracts ratified, but we do get a disproportionate amount of them ratified, and it's not me alone, and it's not her alone. It's really a pretty focused team effort that helps buyers get houses and negotiates great deals.
Yeah, and one of the things I want to say, as we have this love fest, one of the things I want to say is he is absolutely right. Partnership is really important. I know a lot of lenders. I've partnered with other lenders in the past. But the thing that I like most about NFM, the people are awesome, the people who work at NFM, but it's not just Craig. Craig has a whole machine team behind him from, I mean, at least 5 or 6 people on this team. And each person has their specific job that they do in the transaction to keep the train moving along, and no one drops the ball. Everyone hands does a very nice warm handoff to the next person, and the train keeps moving. And Craig is the kind of like the quarterback in that whole system. And so it systematically works every single time. There's no fumbles, there's no flags on the play. There's always a smooth transaction. And that means a lot because this is very stressful. Buying a house can be extremely stressful. But our job is to make it easy for you, for the buyer. We try to take all the stress out of it. I get stressed sometimes, Craig gets stressed sometimes, but we never let that stress fall on the buyer because it's really important for us for it to be seamless. It's really important for us for you to have an optimal customer service experience, because what we know for sure is that when you have a good experience, you share that experience with others. And our business is very much a referral based business. And so that just continues to circle back when we do a good job, and we pride ourselves on doing a good job. We like reviews, we share our reviews with other people. So that's a little bit about us. So let's get into it. So Craig, what are the steps to get pre-approved for a mortgage? What does a person need to do to once they come to you? How do they get pre-approved for a mortgage, and what does that mean?
All right. Well, there's a bunch of little steps, but I want to say this to somebody, especially somebody that's never bought a house before. There's going to be a fear about it, about the process, about things you don't know, a fear about trying to buy a house and maybe failing, or maybe not turning out exactly like you wanted to turn out. That fear is real, and that fear can hold people back for months, years, sometimes decades, where somebody can buy a house and they just have that initial fear, which stops them from moving forward. So I really believe that the first thing that you have to do is kind of look inward and say, are you ready to overcome a lot of things that are going to be new to you, that might challenge you, and things that you're going to have to work through. And so your initial thing is obviously going to be finding an agent, finding a lender, and you're going to find that experienced people in those roles are going to ask you some tough questions. You're going to feel pretty vulnerable initially when you start answering questions. People are going to, we're going to ask you about, where you want to live, what you want to buy, how much you want to spend, what do you feel comfortable, how much money you have saved, a whole bunch of little questions that, you're not really that in normal life, you don't answer those kind of questions to people that are relative strangers. So the first step is really understanding that you are going to feel a little nervous, you're going to feel a little vulnerable, and you're going to have to be ready to overcome that, because if you don't, you're going to struggle throughout the whole process. Once you've kind of done that initial first, and I think you would agree with me, Shante, right? In that area, is get ready to be a little bit vulnerable.
Yeah.
Then after you've done that, I mean, mortgages are pretty cut and dry. There's only 3 or 4 things that will determine whether you get a house. Number one is your income. Number two is your savings. Number three is your credit. And number four is affordability. And when you sit down and you start thinking about a house, what you really have to kind of analyze is, what can I really afford? What is realistic? What is something that I can afford when I'm doing well and when I'm not doing so well? What is that payment going to be? And I would say, have that internal conversation, have that conversation with your agent, and have that conversation with me. Next thing is going to be your credit. You're going to either be ready to buy a house, kind of ready, or not ready. And it doesn't really matter what category you fall in. If you're ready, great, we'll take you forward in that path. If you're kind of ready, we'll do a little bit of cleanup. Excuse me. And if you are totally not ready, we'll give you a plan to get ready. Income's simple. It's just going to be about pay stubs, W-2s, tax returns, that kind of stuff. And then savings. Even if you do a loan with very little savings, you're all going to need some. But I'd say those are the main things.
Okay. So I actually was talking to a couple yesterday who said they thought that you needed 20% down to buy a house. And I find that a lot of people believe that you need a massive amount of money to buy a house. So can you explain how much money do you actually need to buy a house? And maybe you can go into the different types of programs, which is why the money is different.
Okay, so buying a house. When you buy a house, you can literally buy a house with 100% financing. And what I mean by that is, if you buy a house for $300,000, you can get a loan for $300,000. Now, there's different criteria whether you put no money down, or you put a little bit of money down, or you put a significant amount of money down. When you come to the transaction, what I'm going to ask you is, what do you feel comfortable putting into the transaction? That's going to be one of the first questions I ask you. If you say to me, I want to put down 20%, I want to keep my payment as low as possible, then we'll go down that path and we'll figure that out. You might think that people have told you you have to put down 20%, and that's what's stopping you. But the truth of it is if the credit and income are right, you can put down as little as you can. The loan can be covered at 100%. And as far as and then we have the different programs, whether it's FHA, conventional, USDA, VA. They're all going to have slightly different criteria. The reality is the little of money that you put down, the terms will slightly decrease in terms of terms. So the best terms are obviously 20% down, but it's a minimal between 20% down and no money down, and it's in all scenarios it's better than renting. I was going to say, yeah, in all scenarios it's better than renting, and we'll just figure out what's right for you. And truthfully, if I talk to 3 different people, I'm probably going to give 3 different people like different point of views depending on what their goals are, because you're not going to have the same goals as the person next to you. You just won't. Everybody has their own criteria.
Yeah. So to piggyback on that, and it goes into our next question, there are several different types of financing. So VA financing is 0% down, right? So there's no down payment. But there's also USDA financing, which also says that it has 0 down payment. But is there a such thing as buying a house for free? What costs are affiliated? I know the answer. I'm just saying it out loud because this is what people are thinking. What are the costs affiliated with purchasing a home? Like, what's the difference between your down payment and your closing costs?
So you have to understand that there's 2 different categories, and you really have to break them down into those categories for purposes of understanding. If you buy a $300,000 house and you put 5% down, say hypothetically, that's $15,000. That would be an actual down payment. But in addition to the down payment, there's closing costs. The closing costs are the actual cost of the transaction, which include the settlement company's fees, the state and county transfer taxes, setting up an escrow account, the miscellaneous lender fees. There might be some miscellaneous real estate brokerage fees. There's a whole bunch of little things. And on a $300,000 deal, I would say it's probably about $10,000 roughly to close the transaction, in addition to the down payment, which could be 15,000. So when you get down payment assistance, so you get 100% financing, it's covering the down payment part. When it comes to the closing cost part, either you or the seller are going to pay for that. And that is the part that you'll find is negotiated in the transaction between your agent and the listing agent. Either the seller will pay none, all, some. It just depends. Your loan will determine how much you want to put down, whether you want to put down, like I said, 3%, 0%, 20%. That's a conversation we'll have. And then in addition to that, we're going to discuss, you're going to have to figure out what we're going to do with the closing cost. And sometimes people, agents can negotiate that into the contract. Sometimes they can't. It just really depends on how the transaction is negotiated.
So to be clear, there is down payment and there's closing costs. So the down payment goes towards how much you put down in terms of your mortgage. The closing cost is all the other fees in the transaction that you named, right? And so would you say that closing costs is about 4%, 4.5%? What percent would you say of the transaction?
Yeah, I mean, as the transaction gets larger, the percentage goes down because some of the costs are fixed.
Mm-hmm.
But yeah, I think 4% is a good estimate. One thing I would say, just when it comes to closing costs, imagine if you were going to buy a car, and you buy a car for $40,000, and you buy the car and it's $40,000, and you say, okay, here you go, 40,000, and then you have to pay tax, tag, transfer, and all that kind of stuff. That's the closing cost. You buy the car for X, and then you have the closing cost, and it's kind of a good way to kind of think about it.
Yeah. So can you talk about Maryland Mortgage a little bit though, so they can understand what that means? Or just give an idea of some of the programs that are out there, because we specialize in all the programs. So if you are looking for a program, Craig always tries to fit you in a program if you can fit in one, but it's not always the best option, and he'll explain why.
Yeah, I mean, my general philosophy is that if I can get money through the state or the county, and that will help get you into the house, I'm going to try and do that. The Maryland Mortgage Program, I actually think is one of the best programs in the country. It offers a whole bunch of different levels as far as what you are eligible for. You can they offer grants, a 3% and a 4% grant. And what I mean by that is if you keep using that $300,000 example, but if you buy a $300,000 house and you get a 3% grant, they give you basically $9,000. It's a little less than that, but $9,000. If you got the 4% grant, then they would give you $12,000. So there's two grants that they have at 3 and 4%. And then they also have down payment assistance loans. This is where they give you a 3% loan that you use for the down payment or closing cost. And why you have the different options is the loan has one rate, the grant has a higher rate, and the 4% grant has a slightly higher rate. So what you have to do is you have to kind of look at all your options and see whether or not, which one fits you the best. And sometimes when I'm doing a transaction, I might even look at somebody's situation and go, well, maybe we don't want to put you into this program. Maybe we want to put you into something where you take a higher interest rate and we give you a lender credit, and that rate is still less than
the overall rate,
the grant program. So it can be a better deal. And it just really depends on how the market shifts and what works and what works for you. But I would tell you that in Maryland, if you have a little bit of money, Maryland is really pro helping first-time home buyers get into a house, and there's definitely money available. And Maryland considers a first-time home buyer somebody that hasn't owned a house in in the last 3 years, but several of their programs don't even have the 3-year requirement. You can purchase pretty much immediately. So yeah, there's
You
money and
mean
it's
you
good.
own the house and you sold it, you can still get it?
Yeah,
Mhm.
some of the programs do allow for that.
Yeah, so that was going to be my next thing. A lot of people ask me, well, what about the first time home buyers program? So two things I was going to say. It's you have to qualify for the first time for any of these programs, and it's heavily dependent upon, and Craig can elaborate, your debt to income ratio. So that's why he always does a very comprehensive look at where you are financially and what you actually will qualify for, and he basically gives you a spreadsheet kind of sort of to let you know exactly what you qualify for. So even though a person may have the credit score to get down payment assistance, their debt to income ratio may prevent them from getting it. So maybe you want to elaborate on that a little bit, because
Yeah.
that from the
Let me say this. I typically give people both options,
mm-hmm,
and then I let them decide. And sometimes, about half the time, they'll just ask me what I think,
mm-hmm,
and it just really depends on. Um, they'll ask me what I think, and if the program has a higher rate and they have money in their 401k and they can get a loan at maybe a rate that's 1.5–2% less, I might say, hey, this is a better option. Um, it just really depends. But debt ratio is important because what debt ratio is it's a percentage of your income. So if you made hypothetically $10,000 a month and your mortgage payment and all your debts were 4,000, you would have a 40% debt ratio. It's pretty much that simple. So the programs at the lowest scores allow you a 45% debt ratio, but you can go all the way up to 55, depending on what you're trying to do.
okay, good answer. All right, so how do you, and this is in line with what you just talked about, how do you figure out what exactly a person can afford? How do you figure out what that qualifying amount is? What's the formula?
Um, it's not really a formula. I'm going to ask you to send me your pay stubs, your W-2s, and then basically what we're going to do is we're going to calculate what the max amount you can get at the different programs. I also, and when I mentioned in the beginning affordability, I will ask you, I will say, what do you feel comfortable paying? In many situations, people qualify for more than what they really want to, what they really could buy for. You might qualify for a $4,000 a month mortgage payment, but you might say to me, no, 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 no. I don't want to spend more than 1,800 or 2,200. And so then we're going to focus on what you feel comfortable. I might say to you, okay, you're telling me 2,000. Let me show you what 1,800 gets you and what 2,200 gets you. When you're talking to Shantae, have her show you houses between X and X. That'll be slightly over your budget and slightly below your budget, and then you can decide. But I'm looking at your monthly income, your monthly expenses, and then I'm doing a quick calculation. But that calculation will give me the max. But what I'm really looking for is a little bit of help from you, because when we're calculating a loan, we don't take into we don't take things into consideration that might be very important to you. You might I don't know, your kids might be in a ton of after school activities that we don't see in debt ratio, but can be very expensive. You might be helping a family member every month, and that's not calculated in your debt ratio, but it's a real expense in your life. So there's things that you are going to know that we're not going to take into consideration. That So you've got to give me a little bit of a guide, and then typically at that point I will tell you this is the max, this is how much you can get for what you want to spend, and we find some middle ground normally.
Yeah. So, you made me think of something. So, for anybody that's listening that is a person that's self-employed, like myself, or maybe they have a full-time job and they also have a business on the side. Let's say you work for the government, but you also do hair. How do you calculate their income? I know you use 1099s, but can you elaborate for anybody in that position?
So a self-employed person, typically we're going to look for tax returns. And what we're going to look and on your tax returns is we're not looking for the gross number. This is the total number that you brought in. We're looking for the number after expenses. So you might be a real estate agent. I'll use that as an example, and you might have a 1099 from your company that says $100,000. But when it comes time to your taxes, you have a bunch of expenses that are, you know, specific to your job, and maybe you have to write off $50,000 of expenses, and so then your net income becomes $50,000. That would be the number we use. Now we can do 1 year or we can do 2 years, depending on what your credit score. If your credit score is high enough, you'll probably just be able to do a 1 year average. If it's sometimes you have to do a 2 year average. And then Shantae also mentioned we do have some other programs that we don't need pay stubs or W-2s or tax returns or anything like that. We just go off the 1099, but that would be considered, they call that a non-QM product, and that would be considered a loan that it's a higher rate and it's more money down. On the programs where there's absolutely no documentation except 1099s, the minimum down payment is 10%. So we'd be looking for more money. But the reality is you should kind of present what your situation is to me, and then I'm going to kind of guide you. I'm going to be like, you have to go in this direction, you have to go in this direction. It might be something like, hey, you know what, you're not making enough money right now. These tax returns are not, giving you enough money for you to qualify. Can I? And you might have to step away from it, and file when your business is making a little bit more money, or have a different type of job situation, or maybe you have the money coming in, but it's not being reflected on the tax returns for various reasons. But maybe a family member can co-sign with you because you can afford it. It's just not showing on a on a piece of paper. It does. Loans are kind of done, and it doesn't always what's intuitive. It doesn't always make sense in loans.
Yeah.
So
Okay.
yeah.
So just to review, we talked about what the fees are affiliated with buying a home. So I'm just going to review those real quick. Um, Down payment, of course. I'm looking at my notes. The closing costs. Now, closing costs, people get a little confused about what closing costs are. So I'm going to give you the breakdown of what that means. So you have title fees. That's the cost for the title company to ensure that you get clear title from one owner, from the seller to you. There are taxes, county taxes, state taxes. There are escrows that you're going to be setting up. There are lender fees. There are realtor admin fees. There may be a home warranty fee if we decide to that the buyer will be paying for that. You may want the title company to do a survey, which is telling you what the property lines are. There are transfer and recordation costs. That's the cost to transfer the deed from the seller to you. And the counties make a lot of money off of that. There's homeowners insurance that's required. There is a home inspection fee. There is an appraisal fee. And that's pretty much it. But buyers do not pay real estate commission. Sellers pay real estate commission. So you don't pay me anything to collaborate with you. So what exactly does the realtor do to help you? We do a lot. So the first thing we do is, for me anyway, this is my process. The first thing I do is we decide that we're going to partner together, and I provide you with some home buyer education on the process, on the market, on mortgages. And then the next step would be for me to pair you with my lender. After that, you get pre-approved for the financing, and then I customize your home search and we start shopping for a house. We do that in collaboration. You're looking, I'm looking, and then we together come up with a list and we go out to look at homes. We then write a contract. I can tell you that in this market, it's been really crazy. I've over the weekend, I went to a house where there were 15 people waiting outside on one house. So this market is very competitive. January is typically a down month where it's a little slower, but I can tell you over this COVID market, it's been very aggressive from January 1st to December 31st. And so if you're thinking, oh, I'll wait till summer to buy my house, or I'll wait to, the end of spring, that's probably not a good idea. It's probably best for you to take advantage of the slower time period, which is now, January and February, get pre-approved, which is a process. You don't get pre-approved overnight. It is a process, but it's a relatively smooth and quick process. And let's get out there shopping. Um, a lot of people always are amazed to find out that, giving you an example, it's the end, almost the end of January at this point. If we get you pre-approved before the end of January, we start looking, we write a contract in February. Technically, you wouldn't close until beginning of March, which means you will skip April. Your first payment is not even due until May. And so I think people forget that time period. And so you have plenty of time, but not really. Like, you need to get on it if you want to take advantage of the market. People are still writing multiple, I mean, sellers are still receiving multiple offers on their properties. We're still being very aggressive with the offers. I showed a house the other day that was 200, listed for 250,000. There were 15 offers. By 9 a.m., there were three. By 12, there were five. By 3 o'clock, there were 12. And by 7 o'clock, there were 15. So that tells you that I kept in contact with the agent, which you have to do if you want to win. I made sure that the agent talked to Craig, and we actually won. And that is crazy because it was 15 other offers, and they all were very, very close. And so that's why we keep saying that the team is really important, because it wasn't just the way I wrote the offer. I wrote a really good offer, but so did other agents write a good offer. So what tipped us over the scale was that she knew NFM, the agent was able to convey to her seller that she knew the reputation of NFM lending. She also knew the reputation of Shantae Parker, the realtor. She felt very comfortable with the client who Craig confirmed had, good credit and was fully qualified and able to move forward. And that person chose us. And so that is what you want to happen. You don't want to, and crazy enough, that buyer spent all last year looking at houses and writing contracts with a different realtor.
Can I interrupt for 1 sec?
Go ahead.
The number one thing that people think they're hiring an agent for is to find them a house. And that is not what they're hiring an
Not
agent
true.
for.
That's just one thing.
If you can operate the internet, you can find a house. The agent is there to definitely help guide you, show you houses in different areas, but the number one thing is not to find a house. The agent's number one goal is to represent you through the transaction after you found the house. And what I mean by that is negotiating the contract up front. You don't need a good internet looker upper. You need a good negotiator. And then when you go through the transaction, there's little steps and things that happen because things just don't go smoothly. It's just nothing, it's very rare that stuff goes 100% smoothly. Having an experienced team around you when it doesn't go smoothly, so they can address those issues, whether it's addressing them with the seller, the listing agent, whether it's addressing them with maybe some personal situation that you've got going on. Those are the things. And truthfully, finding you a house, I probably would say that's about 15% of the job. Yeah, the other 85% is something that it's something that's helping you get through the transaction. And a lot of people think that.
I would say that those steps are the easiest parts of the process. The actual writing of the contract, writing a winning contract, is tough. It actually can be very stressful, especially when there are multiple offers. But I would say the most important part that the realtor does is negotiate on behalf throughout the transaction, not just when they write the contract. It's a negotiating happening up to the end. Like, literally, we can still be negotiating on settlement day. Also, the fortune is in the follow-up. You need an agent who is aggressive, in a nice way, aggressive, and that stays abreast of everything that's going on in the transaction and keeps all parties informed of what's going on in the transaction, and also constantly follows up. So what's happening, the lender knows what's happening, the listing agent knows what's happening, and we know what's happening. And so that part is also really important. And then sometimes we also have to mediate. So we negotiate and we have to mediate between the parties. And that is another job in itself. So that is pretty much what the realtor does. And then that leads me to the steps in the home buying process. So basically, I pretty much went over it. You start by getting paired with a realtor. You then get paired with if you're starting with me, you get paired with my team. Even if you come with financing, which is fine, I always strongly recommend that you shop your mortgage and you at least um, fill out the application with Craig and his team and compare. And 100% of the time, their rates are better. And I'm just telling you, it's better. And most people end up going with Craig anyway. You shop for a home, you write it off, you get a ratified contract. The lender then processes the loan. You're going to get tons of emails, lots of emails. His team, they are on it. They make sure that you have every single thing that you need, and they really make it a seamless process. We're going to do the home inspection. That part of the transaction, a lot of transactions fall apart at this step, the home inspection, because the inspection is a contingency to the contract. And so we go there with a experienced home inspector. That also is very important. He's going to do a thorough structural and mechanical inspection of the home. He's going to tell us every single thing that's wrong with it. And we're going to get a report, and then we're going to go over it and decide, the structural and mechanical things. Can we negotiate these with the seller? Or are these things that we understand that it's a resale home that's aged, and these may be natural wear and tear things, or it may just all be all cosmetic things. But we're going to decide if we can live with those things, if we're going to try to negotiate some assistance from the seller to get these things fixed, maybe a credit, or maybe we get the seller to repair those things. And so that is a part of the process. The appraisal is also a part of the process. That's when Craig requests an appraiser to go out through a very objective system. He puts in the order. None of us have relationship with who the appraiser is. They go out, they do the appraisal, which is going to deem what the value of the home is. So that is when another negotiation can happen, because all the time the house may not appraise for what we actually wrote the contract for. It may not even appraise for what the agent wrote listed the property for. And so that is when I really have to do work to try to keep this deal afloat, because obviously the seller wants to net as much as the seller can net, and the buyer wants to pay what the house is worth, and that is what the lender wants too. You can only buy as much as the house is worth. So we have to go back to the table sometimes and work that out. The underwriter comes up with conditions. Craig passes your file off to them. You get a clear to close, and then we go to settlement, and you get your keys. So that is the steps of the home buying process. If you have any questions, our chat is going. I've been responding to the chat. So if you have any questions, there are quite a few people on here. Please put them in the chat, and I can share them live, and we can answer them. So we're just talking about what we think is important information. But if you have specific questions, please put them in the chat.
Yeah, the takeaways that I would take away from what we've said so far is you don't need a lot of money to buy a house.
Yep.
You need a little money, but you don't need a lot of money. You assemble a team that is going to take the ball down the field. You're not going to do it by yourself. The agent is not going to do it by himself, and the lender's not going to do it by themselves. You need to assemble a team that's going to move you down the field. And then be ready, if things don't go perfect, if things are the best transaction that we can have, the best transaction are the boring ones. When it's boring, you will walk away from it. Well, there was really nothing to this.
It was so easy.
It was so easy. That is when you have won in the mortgage transaction.
Yeah.
And we had a transaction a couple of weeks ago, a really nice family with a couple of young kids. There was this. It was just, we were ready weeks before settlement. There was nothing really to discuss. It was almost like we were like, is there something? We were just waiting for the piano to fall out of the sky in our head, because there was nothing there. So it can be such drama. It can be so drama free. But if there is a situation, then it's that team that you have in place, which is going to basically block and tackle to get you to the end.
Yeah. It's very important too that you're honest with your team, because we are here to help you, not get you. We want to help you get through to the end of the transaction. So anything that comes up, it's really, really important that you tell us. One time, Craig and I were working with this family, and we were looking at houses, and something came up on their credit. And we had worked so hard to get them to the credit score that they needed to get to, because like he told you, if you're not ready, he gives you a plan. Well, they worked the plan, they got the credit score, and we were ready. We started looking at houses. Well, they got something in the mail that told them that that it was going to be a ding on their credit. They didn't know how many points, but we were right there at that where we needed to be. They came to me crying. They were so honest. They were crying. They were like, "Oh my God, is this going to ruin our chances?" And it didn't. But the fact that they were honest, we were able to like quickly come up with a plan to deal with it, so it didn't affect their credit. And so that's when you know that you are in good hands, when the team really is working together, because our only job is to support you, to help broker you through this, to hold your hand, to dry your tears, hold your babies, walk your dogs, whatever we need to do to get you through to the end. That's what we do.
I had a situation recently, and this is the difference between somebody that has done a lot of loans and somebody that hasn't. This lady was super qualified, ready to go, super gung ho, and the agent, I can't remember who I was working with, but was saying that they could only see properties during the morning because they had to take care of their kids in the afternoon. And about a week into this, it suddenly occurs to me, I'm like, why can she only see properties in the morning? So I called her up and I was like, you know, you were explaining that you can only see properties in the morning, da 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 da. You have to take care of your kids in the afternoon. And I get that. A lot of people have to. So, but why are you not at work in the morning? Oh, well, we're off work because of COVID. Oh. The only reason I asked that question is because after 20 years, you shouldn't only have your mornings available if you have a full-time job.
Right,
That's
exactly.
where it's like, that's not something you can measure, but that's like the kind of experience that comes with time. And
Yeah.
little things like that, there's so many little things like that that will help you have a smooth transaction.
Yeah. It's a lot of little steps, and a lot of it happens behind the scenes that you wouldn't even know is happening. But we know. And we sometimes we just take care of it. So you don't even have to deal with the stress of it all. So that was really all I had to say. Do you have any other thing you want to share about Craig? Or at least tell them how to get in touch with you?
If we're wrapping it up, I would end it on the same thing that I started with. Don't be
Okay.
afraid. You need get ready to be a little bit vulnerable. Get ready to go through a process. We're I've spoken to so many people over the last 20 some years. I don't I don't judge anybody's situation. I just need to understand it. You can't really have you don't really have if you don't have a story, you don't have a past. Everybody has a story. Just be open to letting putting it out there. We're not here to judge your situation. We're here to help you into a house. Our goals are aligned. We want to get you into a house just like you want to get into a house. And whatever you bring to the table is what we're going to work with. And if you're perfect, you've paid every bill, you've got savings, you have a great job. Um, we did a transaction also about a month ago. A young girl who really had saved money, had a great job, just everything, and she was just nervous about the transaction.
Very
And
nervous.
and and, and
All the way through.
we got her into the house, and
Yeah.
really, that's the steps are being a little vulnerable, being open to the process, and we will help you get a house every time.
And ask questions when you don't understand something like that.
You-
I think that's the beauty of me being a educator by trade. Like I generally have the answer if you're looking for it, if you have a question, and if I don't have the answer, I know how to get the answer. But I think it's just really important. What I want to leave with is that the market is definitely extremely competitive. Craig has been telling me, I've been watching the news, that rates are going up as well. And so the whole purpose of this seminar is to help you understand that the time is now. 2022 is your time to get up, call us, go online and apply. Take the first step towards home ownership, because it just makes sense. Like prices are going up with everything. Like, oh my God, everything is going up. Groceries are going up, masks are going up, COVID tests are going up, everything is going up, interest rates are going up. And so, and rent is going up. Oh my God, rent is so high right now. So when you really look at, Craig, you gave an example the other day. I can't remember exactly what you said, but you were talking about, we were talking to someone who's been renting for the last 10 years. And if you add up how much you've spent in rent over however many years you've rented, and figure out what that number is times 12 months times however many years, that's how much you paid somebody else's mortgage or your apartment complex when that could have been equity in your own home. And so I just believe in investing in real estate. I own a house. I want to invest in other real estate because I know that real estate breeds wealth. And the only way, I mean, all the people that are wealthy in this country own real estate. They have invested in real estate. And so to me, just what you should do. And I'm here to help you do it. I'm extremely passionate about what I do. I've been doing it for a long time and never gets old. I get super excited with the process. I love working with people. I love keeping in contact with my clients. I love my client appreciation parties, and I have people that come that I never sold a house to, but they constantly send me referrals because this is a referral based business, and I love it when people do that and they support me and they pour into my business. And so keep doing that. I appreciate it 1,000,000%, because I couldn't do what I do without you and your support. So thank you to everybody that is watching. Thank you for sharing this. If you can, share this live with anybody that you know who may be in the market, who may be thinking, who may be on the fence, who live in your house and you need them to get out and get their own house. Let us know, because we're here to help them. Craig, anything else? Let me. Our contact information is in the chat as well. Our phone numbers as well as our email addresses. That's the best way to contact us.
I want to say something also. You know, Shantae is a great negotiator for people that buy houses, but she's also a great negotiator for people that want to sell their houses.
Yes.
She can, if when you have somebody that's experienced with buyers, they bring an equal amount of experience to selling the house because they know both sides of the transaction. So,
Yeah.
and I'm not involved in the sales, but if I was going to sell a piece of property and I wanted a top negotiator representing me in the sale of my property, I would reach out to Shantae.
Yeah, and that's something that we do really well. We're experts at doing both transactions simultaneously. So if you are an owner currently and you want to upgrade, or maybe you want to downsize because you're an empty nester, whatever you want to do, or if you just want to do an investment property, Craig has great investment products as well. Just give us a call no matter what. We're here to help you, advise you, partner with you, and collaborate with you along this journey. So thank you so much. We're at 47 minutes. Didn't even take 90 minutes. We got it all done.
All right,
So
guys. Thanks,
happy.
everybody.
All right.
All
Talk
right.
to you guys later.
See you
Bye.
guys.